What's up, guys? Dirty Mike from Dirty Mike Crypto back with another video. We're looking at EverReflect's Twitter page right now, and we're looking at a new press release that just was released today by EasyByte, and it is highlighting 7 things to know before you buy EverReflect. Now, I know most of my followers and subs here are EverReflect pros, and we've been in it since about the beginning, but I'm going to make this video from the standpoint of somebody who isn't familiar with EverReflect whatsoever and is just maybe heard of it and maybe on the fence on whether or not it's something they should in fact invest in. Now, this is not financial advice. We're just going to be kind of going over this press release here and some things and some facts to know about it, and I will expand on a few of the things that are actually in this article right here. So let's dive on in. Okay, so number 1 here, we got the 7 things to know before you invest in EverReflect. Number 1 is understanding what a reflection token is. There is a new trend in DeFi tokens on the rise, and they're integrating a method called a reflection. Let's figure out how it works. So DeFi charges a set fee for each transaction made with these tokens. So basically, this is a small tax that is made both on a buy and a sell. Now, in the case of EverReflect, it was originally a 20% tax on both buys and sells. 15% was distributed back to the community in the form of a BUSD reflection, and then the rest was in marketing and towards the liquidity. Now, they have lowered this over the last few weeks to where we're going to get this down to a 17% tax. So 15% will always go back to the holders, 1% will go to marketing, and 1% to the liquidity pool. So the money collected will be then distributed automatically through a smart contract. How it gets distributed depends on the project behind it. Most of the time, a larger portion of the collected fees go back to the currency holders. So in the case of EverReflect, it's a 15% reflection. As you can see, this encourages users to hold their tokens instead of trading them. This is meant to decrease the volatility of the token price. So that should make sense to you, being that they reward us so handsomely with holding on to it in the form of a 15% BUSD reflection. This definitely encourages you to hold on to it. This is not a token to be really day trade or swing traded, so that is meant to kind of keep a stable floor and keep like the violent swings that a lot of cryptocurrencies have. So let's go to number 2, and that's understanding the EverReflect tokenomics. There's been a rapid rise of decentralized finance projects that use reflection token mechanics. To deeply understand the concept of reflection coin better, let's look at SafeMoon as a very popular example. SafeMoon is a cryptocurrency created in March of 2021, which makes it one of the newest and most promising tokens. It was created under the Binance Smart Chain. Its popularity stems from a rapid price increase in just a few days. SafeMoon had an absolutely huge and meteoric beginning to it. People were very hyped about this project. It was one of the first reflection tokens to come out, so nobody really knew what these were, and everybody was definitely very excited to receive a reflection back just for holding it. Its popularity stems from its rapid price increase in just a few days. Its inner workings are worth checking out, so let's do that. When selling the SafeMoon token, a user is charged a 10% fee, so that 5% of the collected fee goes back to the holders of SafeMoon, is proportional to the amount that you hold, and the other 5 goes to the liquidity pools on PancakeSwap. So let's look at number 3 on how EverReflect's similarity to SafeMoon. The increase of liquidity on the SafeMoon pool stabilizes the coin that circumvents the volatility. In SafeMoon's white paper, it is declared that one of the goals of its creators is to attain manual token burns. These token burns do not appear to be a default function in the protocol of SafeMoon, but will be done at the creator's discretion. In effect, this makes the token deflationary. So what that means is over time, the amount of tokens that are in circulation are going to be decreased by sending a certain amount to a burn wallet, which in effect takes them out of circulation and can never be accessed again. With SafeMoon gaining market momentum, many projects also rose to prominence using the same mechanism as now used by EverReflect. Examples of such projects are Glass and GMR Finance. There's other tokens that do burns as well. Definitely EverGrow is one of them that does it. They do a buyback in burns, which is a little bit different. Another similar token to EverReflect and SafeMoon is EverGrow. This crypto coin surpassed the 130,000 mark after distributing more than $32 million worth of BUSD rewards. So these guys are a little bit further along. EverGrow is. And a lot of the holders of EverReflect also do hold EverGrow. It's very popular that a lot of people are holding multiple reflection tokens, and the goal is to accumulate as much passive income as you can on a monthly basis with these BUSD tokens. It was launched in September 2021. It's also very similar to EverReflect, as it encourages investors to keep their coins and wait for them to grow while earning rewards on the process. So let's go over some of the benefits of EverReflect. If you have looked at the price chart of SafeMoon before, you might disagree that EverReflect has low volatility. In theory, however, the model prevents short-term trading, undermining strong price fluctuations. This encourages participants to hold their tokens since they have to pay a certain amount each time they sell their coins. And that makes sense. If you're going to lose, 20% or pay 20%, or in the case of EverReflect, when it's 18% now, it'll be 17%, I believe, next week. You want to hang on to these. You don't want to be paying every time you trade them the 17%. You'll have to wait for it to, go well above that, to make any money on it. So it definitely encourages you to hang on to it, and that in turn makes the volatility a little bit less. Long-term trading has been highly preferred by serious investors because they believe that playing the short game doesn't prove to be very profitable. And that'll show with just about all cryptocurrencies. Holding on to them is almost always a better bet than trying to time the market with trading. It's almost impossible to, really accurately time the market on when to buy and when to sell. So in the long term, it's just like the stock market. You're better off putting your money in it and letting it grow and just watching it. We all like to think we're geniuses with timing the market, and some people are. Some people get in very early and can get out at a great, the perfect point, but most people aren't able to do that. So it's just kind of something to consider. If you've been investing in other currency markets like the stock market and Forex, you might have known already that holding on to a currency form for a certain duration can make you reap benefits. The same principle remains beneficial for EverReflect, and that same concept is applied to this new token. So let's go over number 5, EverReflect's resilience to price manipulation. Another good thing about EverReflect is price can't be easily manipulated. Reflection coins can do this 2 main ways. The first is by making users hold on to their tokens as market capitalization takes place, and this reduces the impact of whales on their token prices. The second is by adding value to the liquidity pools. By doing so, each transaction generates more validation, which is always helpful to increase the value of any economy. That includes cryptocurrency in general. Realistically, having a high liquidity pool is beneficial because if it's too low and you have a lot of tokens and you try to sell, somebody might not be able to buy them, or vice versa. So, you definitely want to have the liquidity pool as high as possible, and being that a percentage of each buy and sell goes into it, that continues to feed the liquidity pool and, definitely help not to lock things up. Number 6 is the uniqueness of EverReflect security measures. There will always be the likelihood of getting scammed whenever you invest in crypto tokens, and we've all been victim of rug pulls just about. I told you I was going to treat this as a brand new investor was reading this, so a new investor may not have had this happen to them yet, but anybody who's been trading for a decent amount of time in crypto has had the rug pulled on them, and it's a very, very discouraging feeling, and it can really make you doubt, which projects are legit and which projects aren't. EverReflect is a very, very legit project. It has a wonderful team behind it and a very transparent team that is doing multiple AMAs a week and always in the chat groups talking to people and answering questions. So that's not really in this article, but this is something I felt that you guys definitely should know. So to address this issue, the makers of EverReflect have announced its unique bot deterrent strategy. Having made the announcement just 24 hours after the launch on January 20th, 2022, EverReflect declared the strategy to ensure fair measure protocols. Scammers have been known to automate their money-making and money scamming endeavors a lot, and one of the most prominent ways of doing this is via the unleashing of malicious bots, unwanted software working behind the scenes of every digital session. With these bots gathering sensitive information that they will pass on to cyber criminals, you as a novice investor will be placed at considerable risk. To reduce that possibility, the bot deterrent of EverReflect came up with strategies like these. No investor may sell or purchase more than once within a 60-minute duration. The maximum amount for that period must not exceed 2 trillion tokens pre-tax. That means that each wallet holder will receive a net of 1.6 trillion tokens of PancakeSwap. Now, things kind of changed with this. This information is a little bit out of date. What actually ended up happening is at launch, anybody who was purchasing EverReflect almost completely crashed the contract. And what I mean by that is you had thousands of people pressing the button as soon as this went to be released on PancakeSwap, and it just bought almost all the tokens up right away, and they had to actually take this measure off, or else it would have completely locked up the contract, and it just would have completely screwed up the token right away within the first 10 minutes. So EJ and the guys over at EverReflect actually made this quick thinking decision to lift this protocol up right away so that people were able to sell, so that they could keep the buys and sells moving and not lock up the liquidity. So this was what we originally were going to do with this, but things definitely changed a little bit due to the popularity with the launch of this. And number 7, putting EverReflect in high consideration. As of now, reflection tokens are relatively new in the realm of cryptocurrency and blockchain technology. As an investor and token enthusiast, it would be wise that you proceed with caution. While the tokenomics behind EverReflect might be sensible, you could end up getting more losses than what you can handle. But like top-notch cryptocurrencies today, which were just small cogs in the field of commerce just a few years ago, EverReflect could be the next most profitable digital money you could ever come across. Feel free to utilize its potential. Who knows? It might just give you the financial freedom you greatly hope for. Now, there's a lot more to EverReflect than just what's in this article right now. I think this is a very nice piece for new investors to the project who don't really know anything about it. But, I definitely encourage you to do your own research into it, because there's a lot more to EverReflect than just what's in these 7 bullet points right now. I just wanted to kind of go over these for you in case you weren't very familiar with EverReflect, but it's definitely a lot more to it. They have something that they're working on that is going to be absolutely game-changing in the music industry and live event industry, and that is NFT ticket minting. We're not going to go into it too much now. I did make a video on it, but it's going to be absolutely game-changing, and I encourage you to take a look back on my channel. I do have a video that I kind of did on that, and they actually just released a prototype of what the tickets will look like, and they're just looking absolutely beautiful. And a theory of it is you can purchase tickets and live events with crypto, as well as it can help the concert promoters and artists to collect money on the secondary market, which has not been available to them as of recently. By digitizing the tickets and putting them on the blockchain, promoters and musicians who never received any profit from tickets sold on the secondary market, which a lot of tickets are nowadays, will be able to receive profits from that, which will definitely really increase the amount of money that everyone makes all the way around. So that's also another benefit. That's going to be later in the summer to third quarter of this year. Like I said, I'm not going to get into that too much, but that's definitely a really big thing that they are working on that really wasn't mentioned in this article. All right, guys, that's all I got for tonight on this. I hope you do your more research on EverReflect and, definitely decide that this would be a worthwhile project to invest in. I know I've done my research, and I've been in this project since day one, and I couldn't be more happy with the team and what these guys are about, and I encourage you check it out yourself. All right, guys, have a good night. I'll talk to you